Yeah, look, here's what I would say. They have 11 employees. They've been around about 3 years. They've never taken a nickel of outside capital. So it's 100% internally financed. They have no PE on their board. They have no venture VCs on their board. They're entirely doing it their way. So just stop right there. Like anything with 11 employees and $1.1 billion of cash flow with no outside capital, like that is very, very unique and really, really interesting.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features the founding partner and CIO of Atlas Merchant Capital and now CEO of Hyperliquid Strategies, David Shamus.
I ended up seeing David on about a 3-minute television segment, and I felt like he broke the Hyperliquid story down so well in such a short, concise period of time. And I found myself asking, where did this guy come from? How does somebody like David Shamus and his partner, Bob Diamond, who's the former CEO of Barclays during the great financial crisis, how did these two decide to get so bullish and such high conviction on Hyperliquid, which these two guys are, relative crypto outsiders, but like what about HYPE, the asset, did they see such value in just to, focus a lot of time, attention, energy, and money into getting behind it?
I was most excited to have them apply the frameworks that they've used in their career as investors to what they're seeing in the, emerging landscape that is DeFi, specifically Hyperliquid. So one of the purposes of this interview is for us to ask the question as investors with much less experience, what are you seeing here that's so compelling? And how do you translate the story of Hyperliquid and HYPE to your colleagues on Wall Street?
Yeah, I had a lot of questions for David too, just on the operator side. I've just been curious, how many people does it take to run one of these? What does he think of the number of DATs that are trading below an mNAV of 1? And, pathways to rectify that.
He also talks about the fiduciary duty of digital asset treasury companies to increase book value for shareholders. And that sometimes means having to sell underlying tokens like HYPE to buy back shares. So I think we get into more of the uncomfortable questions that we're facing in this market, and I think he does a fantastic job of addressing those head on. So before we get started, just a quick reminder, you can subscribe at the-edge.xyz. That's the best place to subscribe to the Edge newsletter and to get real-time notifications for the Edge podcast anytime we release a new episode. You can also check out our link tree at edge_pod. That's the best place to subscribe to the Edge podcast on Spotify, Apple Podcasts, or YouTube. And then one last shout out to all of our sponsors that make the Edge podcast and the Edge newsletter possible. Sponsors like TOROS Finance and REDSTONE. Otherwise, we hope you enjoy the episode. Grow wealth exponentially. With TOROS leverage tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With TOROS, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. TOROS reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. TOROS Finance, exponential gains with leverage tokens. To learn more, go to toros.finance. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance. And thanks to Redstone for supporting us here at the Edge Podcast and Edge Newsletter. Banks use your money to line the pockets of shareholders. Meanwhile, Solstice uses the same yield strategies to line your pockets. Introducing Yield Vault, Solana's best yield. A live delta neutral strategy with positive returns month over month for 3 years. Built for internet capital markets and powered by the stablecoin USX. To learn more, go to solstice.finance. Neutral is the next generation of crypto-native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta-neutral strategies to deliver premium, stable returns without taking market direction risk. Neutral is now officially live to mint NUSD and start earning neutral points. Learn more at neutral.fi. All right, let's introduce David Seamus, founding partner and CIO of Atlas Merchant Capital. David, welcome to the Edge Podcast. How are you doing?
I'm doing great. Thanks for having me on, guys.
So you and Bob Diamond built Atlas Merchant Capital together. To kick things off, can you walk us through your career as an investor and how the two of you first connected?
Sure. So Bob is more famous than I am. He was the CEO of Barclays back during the financial crisis and all the drama around that. I started in the mid-90s out of college in investment banking, doing financial services. When I was 25 years old, I was staffed on this crazy idea to try to help two Americans buy a Japanese bank. That was Chris Flowers and Tim Collins. We ended up buying a bank in Japan called the Long-Term Credit Bank of Japan. It was renamed to Shinsei Bank. We raised about $1.1 billion to do it. I was, acting as their advisor, working for Solomon Smith Barney at the time. And as I said, I was 25 years old. 2 months after the deal closed, Chris hired me to be employee number one at the newly formed J.C. Flowers & Co. That deal was super successful. I think it was like a 6X in 3 years. So that's, before everyone knew about crypto and all the exciting returns you can get in crypto, that was seen as a pretty exciting, pretty amazing deal. So I was the first employee at J.C. Flowers & Co., which is a private equity firm focused on financial services. I did that for almost 15 years. I got to know Bob Diamond after he left Barclays. We spent a while getting to know each other before we decided it was the right thing to do. And then we started Atlas, as I said, a little over 10 years ago. Our focus also is financial services, and it's really a wide range within financial services. We've done things as sort of boring as buying a life insurance company that hadn't written any life insurance in many years and was just in a runoff. And that turned out to be a great deal. And we've done things exciting like the stuff we're talking about today on the crypto side. And we've done lots of things in between. Banks, broker-dealers, insurance brokers, fintech stuff, but all things sort of around the financial services ecosystem.
Sounds like you have a pretty broad mandate, I would say, at Atlas. And the one thing I've really wanted to ask you, and I didn't go searching for this before this podcast, I wanted to just hear the answer from you, is just, how do two guys like yourself and Bob stumble across Hyperliquid, which I personally think is still fairly niche, obviously not if you're hyper tapped into crypto, but yeah, how do you guys find Hyperliquid and what gets you excited about it to pursue it?
Yeah, so I would say, I define someone as crypto native as someone who literally spends their whole day only talking about crypto. I'm not sure it's really the definition, but that's how I think about it. We're definitely not that. That's not all we do all day. On the other hand, I think we're pretty crypto aware. And I think what we're going to see over time, there was a period of time, probably most of the last 10 years where people either thought crypto was the next great thing and, every one of us would be, when none of us would have US dollars in our pockets anymore, it would all be Bitcoin or whatever. Either people thought that they were like total maximalists, or they thought it was all a total scam and it was all going to zero. And, Jamie Dimon was probably in the latter category up until pretty recently. I think, speaking for myself and our firm, we've kind of been in between for a while. And I think that more and more people are going to be meeting us in the middle there, where, Bitcoin is probably not going to replace all forms of currency in the next 5 years. But on the other hand, it's not going to zero anytime either. It's got a $2 trillion market cap, more or less. This is real and it's here to stay. And I think we've had that opinion for a while. I think more people are coming into that. But about 4 years ago, we raised some SPAC money back when everybody was doing this stuff during COVID. And we were the SPAC that was going to take Circle public. So we got to know the Circle team, Jeremy, the two Jeremys very well. And that was really our first foray, into crypto as a business. I personally bought some Bitcoin in 2015. I didn't buy enough. But that was our first foray. So, I think Circle wanted to have a partner that was very late to sort of traditional financial services. I think they wanted people like Bob, who was the CEO of a major bank, and someone like me who had been doing financial services investing for 20 plus years. That deal didn't end up happening. We didn't end up getting it through the SEC. We were like a minute away, and then FTX blew up, and that sort of put a kibosh on the whole thing. But along the way, we made a couple of different equity investments into Circle while they were still private, and that obviously did extremely well. So that got us sort of knee-deep into crypto from a professional point of view. Last spring, give or take, sort of a friend and partner of ours who was sort of very knee-deep in all of crypto said to us, you should look at doing a digital asset treasury for Hyperliquid. And frankly, I had no idea what the hell Hyperliquid was at the time. I knew what digital asset treasuries were at the time. And my first response was, that sounds great, but I really don't have any interest in being the 101st Michael Saylor knockoff out there. It seems like there are plenty of Michael Saylor knockoffs. The world doesn't need another one. And then we got into it, and, the story here was just quite different. It's sort of whatever the usual advantages of a DAT are, which we can debate, exist here. But on top of that, you had this scarcity value because at the time, you couldn't buy HYPE in the United States anywhere. Today, I think, even today, last I checked, the only places you can buy it are on Binance US and on Robinhood. So there's still like plenty of opportunity for, institutional buyers or other people that want to get that exposure that can't get it through sort of the regular channels, especially in the United States. So once I kind of figured that out, I'm like, wait a second, there is a legitimate reason here for a DAT to exist for Hyperliquid. As I was figuring that out, I learned more and more about the Hyperliquid ecosystem, how much growth there's been, how exciting the whole thing is. And then when you sort of boil it down to, okay, there's a token, the token sort of is, it's generating cash flow because so much of the cash flow is used to buy back the token. And what valuation it trades at relative to sort of anything else in crypto and certainly anything else with this kind of growth prospects. And it just felt cheap. So like you put all that stuff together, right? Like it's crypto, it's high growth, there's scarcity value. And from a valuation point of view, like almost everything else in crypto, it's not offensive. It's like, probably 20x, give or take, from a free cash flow multiple point of view. All that stuff combined sounded really interesting. And then the last thing I'll say is while we were doing this investigation, we had heard that Paradigm was sort of in parallel looking at this as well. We got connected with them. I didn't know them at all before. And very quickly, after getting to know Matt Alana, we decided it would be a great thing to team up together. And I think, I can get into it, but the partnership was obvious. They're obviously completely crypto native as you get. Where we brought a lot of stuff on the corporate finance side and the getting the deal done side. And we just very quickly came to the conclusion that this was worth doing.
So, David, I want to dive a bit deeper into your Hyperliquid thesis. I mean, for me, when I look at it, like the numbers are pretty obvious. It's generating around 3 million to 3.5 million in revenue a day. That's around 1.15 billion in ARR. And there's 11 employees. I mean, I think they're like hiring 4 or 5 more engineers right now, but I think a lot of us have seen those charts with like Tether, and it's one of the most profitable companies with, per capita employee basis ever. And Hyperliquid's like right there. So, I mean, it's painfully obvious to me, but would love to hear sort of your thesis, your evaluation methodology, Even if you can throw out like how you think this thing should be valued, like what price should it be, or where do you see that going? That's kind of the moon math stuff that I'm sure listeners will love to hear.
Yeah, look, here's what I would say. I would say, let's start out, as you said, I'm going to put an exclamation point on some of the points you already made. They have 11 employees. They've been around about 3 years. They've never taken a nickel of outside capital. So it's 100% internally financed. They have no PE on their board. They have no venture VCs on their board. They're entirely doing it their way. So just stop right there. Like anything with 11 employees and $1.1 billion of cash flow with no outside capital, like that is very, very unique and really, really interesting. To me, from a valuation point of view, if you say, okay, let's just look at it right now. Like, what are they actually doing today? What do the numbers look like? As you say, the 1.1 billion, we'll use that number. That's your number, but I think that's pretty accurate. If you look at just that and you say they're just going to keep doing that, and you're not going to have, it'll sort of, the exchange itself, what they're doing now will grow sort of, with the market or whatever. I think we would sit there and say, more or less 20 times multiple or whatever it's trading at right now. And there's some complication in that math, which we can talk about, but we would say 20 times is really, really compelling. And compare it to Coinbase, compare it to Circle, compare it to any of the stuff that's public or any of the stuff that trades in the private market or people invest in the private market. That's kind of all you need to say this is cheap and it's compelling and we should figure out how to get more. That's part one. Part two is, wait a second, what's all the other stuff they're doing? So you can't talk about Hyperliquid without getting into what HYPE is. And a lot of your listeners probably know, but most people I know have no idea what Hyperliquid is, let alone HYPE. I believe strongly that perps are a really good product to be trading on chain. I think that, you can go to a conference or you can go to YouTube or you can go to any podcast, and people love talking about how real world assets are going to come on chain. And they sort of say that as throwaway lines without really getting into like, what does that actually mean? Like, what do you mean equities or real estate or whatever you have in mind is going to get on chain? Like, how does ownership really transfer? Like, we have hundreds of years of a legal system that doesn't just turn over on a dime and get it on chain so easily to make that all work. So I actually think over time that will be figured out. And a lot of people saying they're going to put stuff on chain probably will be successful. But like a lot of things, it takes longer than we all think. But perps are a way to actually do it today. Like right now, as we're sitting here talking, Trade XYZ and Felix and guys like that are trading U.S. equities in perp form in a HIP-3 format on Hyperliquid. And right now, any one of us can go buy or sell, Tesla, for instance, in perp form. Can't do it in the United States, but we can get on a plane and go to Montreal or whatever, and we can go do that. And that's actually happening today. And to me, like, that's where there's this massive TAM, right? Like Hyperliquid, has been increasing its market share in crypto. It's been growing. If you look at, it versus Binance or versus all the other ones, like there's a reason that CZ has like a complete bugginess crawl about Hyperliquid. It's been eating up their market share. And if that alone was the thing, I think 20 times multiple is a pretty reasonable price. But there's such a massive TAM beyond that. It's U.S. equities right now. There's a company called Ventuals looking to do pre-IPO companies on-chain in perp form with Hyperliquid as the backbone. I actually think it'd be great to have pre-IPO companies, perps trading where you could actually get some price indication and before you get to the IPO. That's very valuable to a lot of people. So all that stuff is like, I don't think any of that's being valued. I don't think many people even understand all that stuff. Even crypto native people don't really understand how big that possibility is. And it's actually happening today. And that's what really gets me excited. So when he's telling me like, how big can this be? I personally think if Hyperliquid was structured as a regular corporate entity, based in the United States with a regular, IPO, it would IPO, I don't know, 3x where it is today. I'm making this number up. It's not like I have precision here, but I look at Circle's multiple, I look at Coinbase's multiple, I look at Robinhood's multiple, and I say, there's no reason why this thing shouldn't be 3x right now. And that's not counting where it's going to be a year or 2 or 3 years from now with all the different things we're talking about here. A long answer to a simple question, but we've been spending a lot of time on this, and there's a lot to pull.
The promise of something like Hyperliquid with DeFi is you're giving this permissionless access to investors to take whatever risk they want, to get access to whatever, different trading markets, use whatever leverage they want. So, this all makes sense. And so we're excited to see that too, like maybe some trading for, SpaceX on these HYPE markets. I think the follow-up, though, to all of this is, that's all of the excitement and the benefit that we see as investors, as users of Hyperliquid. What about regulators? Where does the story end? Like, that was the roadblock for many years, and the regime shift in just the last year has been drastic. Suddenly, the U.S. is pro-crypto, and it's had a huge impact on Hyperliquid, DeFi, Ethereum, Bitcoin, all of crypto markets. What are your updated thoughts on regulators or where we're headed today in terms of regulation?
Yeah, I would say a couple of things. One, there's no doubt this administration is certainly embracing crypto. And I give them credit for that, right? Because they've taken the position that if we don't do it, someone else will, right? It's not like if the U.S. doesn't do it, it's not going to happen anywhere else in the world. They realized that, and they came to the conclusion they want the U.S. to be at the cutting edge, not to be catching up. So I think that's great. I think vis-a-vis perps specifically, which is obviously such a big part of what Hyperliquid does, I personally think as a retail product, a perp makes a whole lot more sense than what other things are out there right now. And I think the most easily comparable thing are just equity options, right? Like if you want to trade a perp with leverage, you can, that is not all that different than buying options. And, I haven't seen the numbers up lately, but, it's kind of amazing what percentage of like Robinhood's trading volume are very short-dated options, right? Like that's what people are doing on there. Those are very levered positions. And I think like to really understand how to properly price an option is really complicated, right? Like there are guys that, work at Goldman Sachs and fancy hedge funds that make lots of money because they're really expert in thinking about the Greeks and thinking about expiration dates and Black-Scholes models. That's a lot to ask for a retail investor relative to a perp where, it says, the price of spot is X, and, you're getting in at whatever at that level or slightly above or slightly below. And, you're 10 times levered. And if the price gets to 90% of X or whatever the number is, you get liquidated out. And like the moment you put that trade on, it shows that to you. You understand it completely. And like as a retail investor, it's not hard to understand that I'm buying a stock or I'm buying whatever security at 100. And I know if it goes to 90 and I'm 10 times leverage or whatever the math is, I get blown out. Like that's easy enough to understand. We can debate whether retail investors should be traded with that kind of leverage to begin with, which is actually a perfectly reasonable debate to have. But let's not pretend it's not going on today, right? It's going on today in the U.S. through options in what I consider to be a much trickier, much more expensive, and much more complicated way of doing it. So look, I think that logic is going to break through. It's not just Hyperliquid that does perps, right? A huge percentage of Binance's business is perps. Like it has grown the way it's grown for a reason, because it just makes a lot of sense to do it this way. It is not clear to me yet where perps will be in the sort of clarity bill that's moving its way through Congress. I think there's at least three possibilities I can think of. One, it's explicitly allowed in the bill. Two, it's not at all allowed. It's explicitly not allowed. Or three, which I think is probably most likely, regulators will have some latitude around whether they allow it or not. And I think they probably will, as this sort of logic comes along. So anyway, again, a long answer to your question, but I think regulators in the U.S. have clearly taken the tough step, right? They've crossed the Rubicon and no longer thinking crypto is going to zero, no longer thinking it's a big scam, and accepting that lots of people are doing this, and if we don't, we'll be left behind. Like, to me, that's the tough river to cross. Once you've crossed that, like, perps are a detail, right? Like, perps are just a less expensive, more efficient way for investors to get the exposures they want versus options or other things. So I think we're going to get there. On the other hand, one thing I found is that like talking about things like short-term, medium-term, long-term, and crypto speak is a very different time scale than in traditional finance speak. It might happen, but it might be months, it might be years, but I think it's going to happen.
The MANTLE Global Hackathon is a 3-month competition inviting developers and founders to design and deploy scalable Web3 and RWA products on MANTLE's modular Ethereum L2, built for high performance, low fees, and full EVM compatibility. With $150,000 in prizes and a $30,000 grand prize, now is the time to build. Register by December 31st, 2025. Submissions are due by January 15th, 2026. To learn more, go to mantle.to/hackathon/U4U, and don't forget to follow mantle_official on X.
Katana is an opinionated blockchain. Its opinion is that for DeFi adoption, there are 2 key things we need: deep liquidity and high yield.
To learn more, go to katana.network. DECIBEL is the new sound of trading, a fully on-chain trading engine supporting spot markets, perps, and yield to trade global markets. Enjoy trustless execution and sub-penny transaction fees. Join the future of trading at decibel.trade and access the Decibel testnet today.
There's a ton in there I want to kind of speak to. I think first of all, calling out the form factor upgrade of perps over options. I mean, I can't state that enough. As somebody that's used both, I personally think retail is going to completely eat this up, like the perp form factor versus options. The other thing, so just on the regulation side too, Hyperliquid has been maybe more active than some people think in feeling out what is okay and what is not. So I think his name's Chris Giancarlo. He's the former CFTC chair. He's actually an advisor to Hyperliquid, and they've been sending, very legit correspondence to a lot of these governing bodies for a long time now, kind of foreshadowing some of their moves. And I think sort of, paving the road for, hey, is this okay? Some sort of regulatory clarity on a lot of these actions. So I don't think they're flying as blind as some people might think with a lot of this stuff. Although, don't get me wrong, it's still a massive shakeup. The other thing I want to mention too is just, hold on. Oh yeah. The other thing I want to mention too is I think a lot of people were like, okay, these HYPE things, who's gonna trade stocks on chain? Like what is the big deal? We saw a massive event happen just the other day around NVIDIA earnings, right? There was a ton of people that used Hyperliquid to position levered long NVIDIA going into earnings. They were taking the bullish view that, hey, earnings are going to beat, bet on Jensen. Why would you ever bet against Jensen? And people could take leveraged positions on that using Hyperliquid. Unbelievable. So that was I think actually their biggest day of volume too. So Trade.xyz, one of the kind of, early trailblazers in the HYPE stuff. I think they did a record day in volume. So they did 200 million in volume just the other day. And I was actually thinking this was going to take a lot longer to kind of get right out of the gate, but it's actually started to exceed some of my expectations with how it's being presented in the app and just how it's working so far. But I don't know if you have a comment on that, David, but
yeah, look, I think the breakthrough moment that we're all waiting for that I don't think has happened yet, but I don't really know. It's hard to know exactly who's trading on TradeXYZ and NVIDIA stock right now, but my guess is today, in November, it's still pretty crypto, people who understand it and are, when it breaks through to the equity world, when someone figures out that, wait a second, trading NVIDIA after hours on TradeXYZ or whatever HYPE market is actually more efficient, meaning lower costs of trading, tighter bid-ask spreads. Once they figure that out, and they start moving over, that's when this thing really hits. And that's when, when you go to, crypto's big, but, equity markets are so much bigger. And when you go to a hedge fund that wants nothing to do with crypto, and you say, wait a second here, guys, you guys are busy trading after hours, NVIDIA and Apple, and all the stuff you do, here's what it's costing you today, both in transaction fees and in bid-ask spread. and here's what it can cost you if you do it on chain through Trade XYZ or wherever else, like that's when it breaks through, and that's when I think we see volumes really explode, and that's when people say, wait a second, who's this Hyperliquid guy? What's going on here? Like that's the moment I'm waiting for. And, like every good economist, I can predict everything but timing. I think that will happen. I can't tell you whether it's going to happen in December of 25 or December of 26 or December of 28. But like we're long-term investors, right? We're buying hype for the long term. And there's probably a good argument that says if it doesn't happen until 2028, that's okay. Like that's still we're still getting in at a price today that undervalues that upside.
I'd love to get more into Hyperliquid Strategies. So for folks listening, they're probably familiar with digital asset treasuries or treasury companies. Would love to talk more about how much hype are you buying? Have you bought any already? What's the plan?
So the answer is sort of on the have we bought any already. So our deal was $888 million, a nice round number. About 65%, maybe slightly less than 65% of that was people committing hype to us, not cash. So the majority, but not the vast majority of the money we raised is coming in as hype token. So day one, we will already own, $500 some odd million of the token. The rest is coming in as cash. We're going to reserve a little bit of that cash for just operating expenses and different things for the company. But the vast majority of that cash we will use to buy hype. And I think there's been a lot of people on Twitter and other places, speculating when we're going to do that and how we're going to do that. So at the moment, we don't have any of that cash. So at the moment, other than the people who contributed hype to us as part of the deal, who already own that hype, we have not bought any more. But once this deal closes, which frankly should be soon, we can get into that if you want, but once that closes, we will use the majority of that cash we have to buy hype. Now, on one hand, we're not going to act like drunken sailors and try and do it all in 5 minutes and run the price up and be stupid about it. On the other hand, our mandate is not to trade hype over the years and buy high and sell low. Our mandate is to buy and hold. So we will be looking to deploy that in a reasonable period of time. And, people ask me, is that going to be 2 days or 2 weeks or 2 months? And the answer is I'm not sure. I'm not just saying that. I really don't know. We're gonna get the deal closed, and we're gonna look at the markets, and we're gonna think about different trading strategies, and we're gonna look to put that money to work over a reasonable period of time as efficiently as we can. And frankly, the sort of crypto meltdown we've seen over the last couple of weeks is actually, in one hand, stressful for all of us, and the other hand, not so terrible if we're going to be a big buyer.
Absolutely. I was going to say the timing could be amazing for your team. There's always that stress that we all feel from the markets melting down, but the most amount of money, and I think all of our experience here, is being able to buy when we see that 4-year cycle melt down, and we seem like we're now in that. Speaking of, DATs have continued to cool off, and this is DATs across all the different types of DATs, whether it's Bitcoin, ETH, HYPE. One of the ways that we compare those DATs is we look at what's referred to as mNAV being the market cap over the value of the treasury holdings. And so there's been this magic number that's been referred to. It's just 1, looking at the market cap over the total value of those assets in the treasury. And so that number has gone below 1 on some pretty major digital asset treasuries like Tomley's, Bitmine, and SharpLink, which are both ETH treasuries. What are your thoughts on this? I guess, how does this play into your thinking with the strategies around Hyperliquid Strategies?
Yeah, so let me mention a couple of things. One, if you look at where our stock is trading now, it's sort of a bit of an astronomical mNAV at the moment. I'm not giving people advice here whether they should buy or sell our stock. I'm just pointing that out, and you can do the simple math that it's pretty high. So we'll see what happens once we close, and once the vast majority of our PIPE investors get their shares freely tradable. But look, I think for most DATs, there's going to be a floor at 1 because, while lots of people are zealots and, people say they would never, ever sell one of their tokens, if you're trading far enough below 1, you have an absolute fiduciary duty to be selling your token and buying back your stock, because that will create book value per share, that will create NAV per share as well. So I think generally over time, there's going to be, I'm not sitting here saying none of them will ever go below 1, because obviously we're seeing them go below 1 right now, and that'll happen. But there is kind of that floor, so long as boards and management teams are acting, rationally and acting in fiduciary duty to their shareholders. The better question really is which ones will be trading above mNAV and above 1 times mNAV, and why. And look, it's like any other company. Like the companies that can generate, better returns than the market will trade at better multiples, and the ones that generate worse returns will trade at worse multiples. And so how does that work here? Like, to me, there's 2 factors for us, right? So one factor is what I'd call the regular DAT stuff, and that is, how are we able to generate return on our treasury, right? So the easy thing is staking, and we can do that, and that generates something. It's at the moment it's like 2.25%. So I'm not sure that alone earns you like some huge multiple. But there's lots of things you could be doing within the Hyperliquid ecosystem that could generate further return. One example I've thought of recently, and I'm not suggesting we're talking to these people, but it just gives an extreme example of how you can earn return here beyond the 2.25%. To be a HYPE 3 builder, to be you need 500,000 HYPE stake. There are plenty of companies, even plenty of very well-funded companies, that might not have $20-something million laying around to just do that. And one example I gave recently, let's use an extreme example. Let's say J.P. Morgan wants to be a HYPE 3 builder. They want to build their own HYPE 3 exchange, and they want to use Hyperliquid. Like, not crazy to think, a year from now, 2 years from now. The guy in charge of that at J.P. Morgan, or the gal in charge of that at J.P. Morgan, will have a budget. Like everything at a big company, it won't be an unlimited budget. And they very well might come to us and say, you know what, how about we borrow 500,000 HYPE from you rather than spending 20 or 30 or whatever it costs then ourselves. And if we could lend to them at J.P. Morgan's, credit spreads, that's better than our staking rate. So that's like a very simple, boring example of how you can earn more. So then the question is, okay, beyond J.P. Morgan, like, what else would you do? Who else would you lend to? And the answer is, it depends. The risk has to match the reward, right? We're going to sit there and think hard about who we might do this with and what we might do, and compare that versus the reward. And we'd only do it if we think we're making, excess returns right there. So that's kind of the simple version, and that goes for any DAT. I think it goes for spades and Hyperliquid, because there's so many opportunities for growth in that ecosystem. But then the second point is, okay, there's also a scarcity value here. Not long after we announced our deal, I had a meeting with a very well-known, very large, high-frequency trading crypto company. I'm not going to say their name, but they're U.S.-based, and they're very big, and you can guess who they are. And, we met in person, and in our chat, they said to me, we've been following HYPE and Hyperliquid for a while. We really like it. We're very impressed with it. We think HYPE, the token, is super cheap. We'd love to own it. And I said to him, great, how much do you currently own? I figured he'd say, $1 billion, right? Because these guys were monsters. He said, we own 0. I said, how is that possible? How can you only own 0? He said, we'd love to own it, but we're US-based. Our compliance department will not let us trade on a decentralized exchange outside the United States, full stop. So when you guys get your deal done, and he's like, I'm not saying I'm going to buy your stock, but he's saying that's one of the few ways we would have to get that exposure that we want. So like, there you go. There's like a large, well-known buyer who can't buy today, who can buy once we get our deal closed in our stock. So like, you tell me what that's worth vis-a-vis mNAV. Like, I think it's worth something. It's not worth nothing. Is that worth 0.5? Is it worth 1 full turn? I don't know. I guess we'll find out once we close, and we can debate that. But like, to me, those are the 2 components of mNAV. One goes for everybody, although I think we're better positioned than a lot of other non-Hyperliquid DATs. And then one is very specific to what we're doing.
I've been curious. I don't know if this is worth asking, but something like a BMNR that's down to 0.8 or whatever it's at, like that mNAV, it just doesn't make sense to me. Like, are people adding in like operator risk to these things or something? Because why should it trade less than an ETF? Like an ETF, there's less operator risk, I would say. It's more of like a clear cut, here's what you're getting. You're not going to get some Yahoo coming in and doing something radical with the treasury. Whereas that sort of can happen with the DATs. So is the market going to, close that gap? Because I still think that the good ones should trade a little bit above one. Because it's the asset plus DeFi. It's the asset plus yield. It's, providing that the operators are sensible and they know what they're doing and they're not clowns. I think a lot of these that can generate a real yield, not the Michael Saylor Bitcoin bullshit yield, but a real yield should trade at a premium. So I don't know where you kind of come in on that, David.
Look, I agree with you. And I agree that 0.8 doesn't seem particularly rational. But, I don't know where Bitminer topped out at. It probably topped out at over 2. Like, that wasn't particularly rational either. And, markets in the short terms, as we all know, are not rational, right? And long term, they are rational. So, I think that stuff will even out. But, look, if you said, okay, that's crazy, I'm going to buy Bitminer at 0.8, if you just did that, you still might lose money, even if it goes back to 1, because ETH might go down, right? So now, okay, I have to buy Bitminer and I got a short ETH. This stuff gets complicated.
David, in case listeners didn't follow a point you were making, can you just quickly dumb down when the mNAV is below 1 and you talk about a fiduciary duty to sell the underlying tokens, and in this example, let's use HYPE to buy back more of your own stock. Can you just dumb that down for folks? Why do they do that? Because this is something I think our markets are very challenged with right now. I think there's a real misunderstanding that DATs are there to buy forever and ever, up only, never sell. They are to be the diamond-handed holders, and we've already started to see some DATs have to sell and follow through with this fiduciary duty. So whatever you can do to simplify that.
Yeah, look, here's what I would say. And I've there are definitely some zealots out there that think that, a DAT by charter, by law, by, divine, whatever, can only ever be buying, can only ever be sitting there more and more. I think the job of the management team and board of every public company, whether it's General Motors or whether it's, Bitminer or Strategy, is to grow the book value per share of the company over time, right? To accrete that value over time. Different companies do it in lots of different ways, but ultimately at the end of that rainbow, you have to figure out how you're growing the book value of your company. And I think that, the easy thing everyone understands is when the mNAV is above 1, right, you can go out and issue stock and use those cash proceeds from issuing stock to buy more of the token. And by doing that, you're accreting your NAV per share up. The fact is, the opposite is true also. If your mNAV is below 1, and let's just say a lot below 1, you could sell your token, because your token you're going to sell at market, and you can use the proceeds of those sales to buy back your stock, which would also accrete the book value per share over time. And look, I think my goal as the CEO of Hyperliquid Strategies, I want to grow Hyperliquid. I want it to be super successful. I want to see the token go up over time. And I think that 95% or 98% of how I'm going to spend my time in this regard is consistent with growing the ecosystem and growing everything. But in the end, our job as a management team is to grow book value per share of our company. And if there are times when that means, and this doesn't just go for me, it's go for any DAT out there. If there are times when the best way to do that is to be selling your token and buying back your stock, you definitely should be doing that. And by the way, if you wonder why some of these guys might be trading below mNAV, let's just say you have 2 DATs right next to each other. They're exactly the same. One of them has a management team talking like me. One of them has a management team that are a bunch of zealots that say, never, ever, ever would I sell one token because, that's against my religion. Which one do you think is going to trade a higher mNAV? Which one do you think the market is going to expect to do what they're supposed to do for their shareholders? I can promise you, the former will be trading at a higher mNAV than the latter. And if you wonder why some of these might be trading at big discounts, it could be because not every board and not every management team in this world always has fiduciary duty of their shareholders top of mind. I can give you thousands of examples of that through lots of different industries.
As a DeFi investor, I turn to Maple for permissionless institutional quality yield in a single liquid asset backed by over-collateralized loans. Maple's SYRUPUSDC and SYRUPUSDT are now supported as collateral for enhanced yields on major DeFi liquidity hubs such as Pendle, Fluid, Camino, Jupiter, Morpho, and Aave. To learn more about Maple, go to maple.finance. River is building a chain abstraction stablecoin system that connects assets, liquidity, and yield across multiple chains. Season 3 is live. Earn River points by using SAT-USD in DeFi such as Pendle, PancakeSwap, and Uniswap. Stake River points to accumulate more or convert points to River tokens whenever you like. To learn more, go to river.inc. Hey folks, I want to tell you about our sponsor Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. PURR Institutional delivers secure, high-yield Ethereum staking built for institutions. With battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs, PURR gives institutions full control and optimized returns. PURR is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi.
One other follow-up I wanted to do just around the point of staking. That, sounds like the most obvious layup, easy to do. I mean, not to say it's without risk completely, obviously, but there's different ways to stake. You could stake it kind of natively with the validator. You could use something like Kinetic's HYPE. It's kind of like their institutional version. I guess my question to you is, could you stake 100% of it? And what is the form factor? Is it like with a validator? Is it with something like Kinetic's HYPE?
Let me say a couple things to that. One, we definitely can stake 100%. I'm fairly certain the rules around HYPE is that you can unstake within 7 days. So, it's almost impossible to imagine that we're going to have any serious need for capital that can't wait 7 days. As I said, we're going to keep a cash reserve because we're not crazy. We're going to manage this thoughtfully. So we definitely can do it the normal way, the regular way, which is with a validator, 7-day liquidity, no problem. And we're already set up to do that. We're using Anchorage for custody. We have that all lined up day one to be able to do that the minute we close. I think with someone like Kinetic, the whole idea of an LST is interesting to us. And again, we're still working on this, and I know that other DATs are thinking about this too. But a guy I used to work with, who I have a tremendous amount of respect for, will tell you that people will walk over hot coals to figure out ways to avoid or defer taxes. And here when you're a U.S. company, you're a U.S. taxpayer, figuring out legal and thoughtful ways to optimize our tax position is something we're gonna be thinking about all the time. The way I understand it today, and this is still evolving, is that regular way staking revenue is taxable, but potentially owning a liquid staking token where the value is accreting of that token, so you're not getting more tokens, that tax could be tax deferred. So you don't not pay. It's not taxable. It's just not currently taxable. We haven't fully bottomed that out yet, so I'm not sitting here pounding the table saying we're absolutely going to do that. And even if that does work, we have to make sure that whoever we're doing it with and how we're doing it is equally safe as putting it with a validator the way we're doing now. But to the extent that it is, there's a tremendous amount of value in not having to pay taxes today and being able to pay it later. And that's like one of those things where, like, again, two identical DATs, one has figured out a way to defer taxes, one is paying taxes currently. Like, there's a reason that the former should trade at a higher mNAV than the latter. So the answer is we're thinking hard about that. We know the Kinetic guys. We spend time with them. We have a million things to do between now and close. This is one of them. My guess is the day we close, we won't have any iHype or whatever they call it, KHYPE. But over time, we're going to be thinking hard. If there's a tax advantage to doing it, we certainly will.
You actually answered one of my next questions. I've been kind of thinking how some of these DATs are handling tax bills. Just another couple that come to mind. I'm always curious, how many employees does it take to run one of these things? I'm sure that number could range widely depending on how much of this you do in-house, how much you farm out to, different contractors and people with different expertise. And then just where does the, the payments and the costs come to run all this? Like, where does that come from? Which bucket? Is that coming from yield? Is that kind of pre-decided in the pipe up front? Yeah.
So I can't speak to how everybody runs their companies, but I can tell you how we're doing it. We will likely have 5 employees. We're going to have a CEO, which is going to be me. And by the way, I was part of the sponsor group, obviously, at Atlas. So the only compensation I'm initially getting is as a director when I go on the board. So I won't be getting some like big fancy CEO package initially. Maybe over time that'll change. We'll see. We're going to have a COO, a CFO, sort of a PR and marketing person, and we'll probably have sort of another sort of accounting, controller, trading type as well. So that's kind of how we get to 5 day one. Could I see us growing to 6 or 7 or 8 over time? Yes. Do I see us growing to 50? That's really hard to imagine. I don't see how that could be. I don't know how many people MicroStrategy have. Presumably they have more employees than any DAT, although maybe I'm wrong about that. But, look, you definitely can do this with a small number of people, but you can't do it with 0 people. I've heard some DATs out there that literally have like a CEO and that's it. That seems really risky to me. Because look, a DAT is a public company, right? You got to have proper financial statements. You got to file them on time. You got to have an audit done right. Delays in getting financial statements out or problems in financial statements have to be restated. Like those are problems that are hard. You can fix the problem. It's hard to fix the reputational damage that comes from that. So, for what is a relatively small amount of money relative to our total size, we'd be crazy not to do that in a first-class way.
So in case our listeners are trying to connect the dots between the old entity, Sonnet Biotherapeutics, and Hyperliquid Strategies, can you just clear that up for us? What is SON, the ticker on the NASDAQ, versus what will be Hyperliquid Strategies?
Yeah, so the company today, Sonnet Biotherapeutics, that's the company we are merging HSI into, Hyperliquid Strategies into. At the moment, the ticker is SONN. Once the deal closes, which I expect to be the Wednesday after Thanksgiving, once the deal closes, the ticker will change to PURR, which is very much part of the whole Hyperliquid sort of ecosystem thing, and people love that ticker. So once the deal closes, it'll be PURR. I want to explain to anyone thinking about buying the stock right now, just to understand, today, none of our investors have their shares. So there's only a very small amount of float that trades on SON alone. Once the deal closes, pretty much all of our investors get their shares free and clear, fully registered, and will be able to trade. And it'll be awfully interesting to see what happens and where this thing trades there. As I said, I'm not giving stock advice, but the ticker today is SON. If you're a SON shareholder today, you will automatically switch to being a PURR shareholder once the deal closes.
David, one other question I want to ask you is just around Jeff and the Hyperliquid team. They're a bit of like a closed shell almost with who they talk to, even, Hyper EVM dApps that are building. I don't think there's a lot of communication back and forth between Jeff, like the Hyperliquid founding team, and a lot of these apps. And not to say that that's a bad thing. I think it can be kind of a feature because you're not getting these like kingmakers coming up. Like they're not saying, hey, we're going to back you or things like that. But just curious if you've even met Jeff. Do you have any insights into kind of the long-term vision or future of Hyperliquid?
Yeah, so the answer is yes, I have met Jeff. Bob has met Jeff. We've spent some time with him, both in person and also on video and things like that in different things. I wouldn't say I've spent a ton of time with Jeff and the team. We spent some time. We spent enough time to get ourselves comfortable. We spent enough time, we're in contact now when things come up and it's worth talking about. But I think, part of Jeff's magic is he's figured out how to be the CEO of a company with over $1 billion of cash flow without having to like consume himself with all this sort of other stuff that CEOs spend so much time doing. And I actually think right now, like literally as we speak, you know, by me being on this podcast is sort of me, you know, doing something that he doesn't have to do. I'm out spreading the gospel so he could be behind his computer doing coding or whatever it is, you know, how he spends the majority of his time.
We tried to get him on this podcast, by the way. We tried to get him on.
Yeah, it's not easy.
You know what? I respect that, and I think I bought more hype, to be honest. So
yeah, look, he's done a few things. He's done a few podcasts, and he was at Token in Singapore. I think he likes Token because he lives in Singapore. So it's not like he's a complete recluse and won't do anything. But I think that, you know, you can easily fill your whole day with this stuff. And, you know, he wants to, you know, again, no board, no, he wants to focus on what he wants to focus on, which is great. And as you say, like when he said no, you got even more excited about buying hype. And you also, you mentioned the point, like we talked about this earlier, the whole concept of builders being able to do things permissionlessly on Hyperliquid. You know, a regular company, if it had what we were talking about, HYPE-3, you know, if you wanted to be a partner, you know, you'd have to go on a plane and go meet Jeff, and you'll, you know, make a deal, and your deal might be different than the next guy's deal, so you got to make sure you get the best deal you can. Then you'd have lawyers fighting about it for weeks and weeks, and there's like a huge inefficiency in all that, right? It's a waste of time for Jeff. It's a waste of time for us. He built it where he says, you know, I don't care who you are, if you're J.P. Morgan or you're Irving the Tailor, to quote Tarantino. You know, it's the same deal. Here are the rules. It's on the website. You know, you can, if you follow the rules, you can do it permissionlessly, and we don't care who you are. And it's a great way to do it. It's just a super simple, and it keeps him focused and keeps the company very fair and honest, which I really like.
It's hard to explain that nuance to folks who haven't like dug into cryptocurrencies, smart contract platforms specifically. When I first learned about Ethereum, I remember I was trying to explain to my buddies that what's kind of like Salesforce, but instead of Salesforce, the platform is Ethereum. And then instead of all this related to like CRM and marketing, it's related to money. So then these people are building these money applications, and they're actually reinforcing the value of one another, but there's no permission to be asked. They just build, and then if they build so that they can integrate, they benefit from one another. It's like pure economic incentives driving everyone. And that's part of the magic of Hyperliquid, is they've achieved some sort of escape velocity with everyone fully incentivized, like yourself, you know, building, investing, evangelizing, and so forth.
Yeah, I think a good analogy is AWS. You know, like if the three of us want to start our own website or our own e-commerce business or whatever, like we can go and set up on AWS permissionlessly, right? We don't need to go, you know, call the CEO of Amazon, and like 2 minutes later we're up and running. And, you know, you're using the AWS system as the back end to run our business. And like maybe when you get to be monstrously huge on AWS, you can get some discounts or whatever. You know, I think it's a pretty good analogy, AWS. And I think that's a lot of ways how Jeff and the team see themselves, as being kind of the AWS behind, you know, the future of finance moving on to the blockchain.
David, I think this is a great place for us to start to wrap up. So I want to remind our listeners that they can learn more about Hyperliquid Strategies by simply following the handle on X or Twitter. It's HYPEStrat. And then follow David's personal handle. It's DShamus. And we'll put that into the show notes so everyone can easily find it. David, thank you so much for joining us, and just want to give you the final word.
No, this was great. Appreciate the time, guys. And, you know, look, I'll make one last point. When we were raising money to do this, we talked to plenty of people, even people that I know that are serious Bitcoin owners, you know, in the billions. And this was sort of May, June of this year. And even at the time, they had never heard of Hyperliquid. And to me, like, that's the opportunity, right? This is still, you know, this is a big topic among crypto geeks like the three of us. But, you know, it's still such an opportunity for the rest of the world. And you know, I think the three of us see it, where there's just so much room to grow here. And that's what we're excited about.
Thanks, everyone, for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.